Welcome to the very first episode of the Under the Ledger podcast, presented by WLM Accounting. I'm your host, Alex Araujo. Here at WLM Accounting, we believe in empowering business success together, and we understand that many business owners are experts in their fields, but the financial side of the business can sometimes feel less clear. So the aim of this podcast is to talk about all things accounting, tax, and finance, but in a practical way that actually matters when you're running a business. Joining me is my co-host, Charley Tarchichi. Charley is a director here at WLM Accounting. He has over a decade of experience in the field, and in that time, Charley has helped a lot of small and medium businesses navigate everything from tax obligations to growth decisions and financial strategy. And on a more important note, Charley is an avid supporter of the Canterbury Bulldogs, and he has recently become a father to twins. So with that all said, welcome to the podcast, Charley.
Thanks, Alex, and thanks for that wonderful introduction about the Canterbury Bulldogs. As you know, we've got 1 for 1 so far, so very, very happy with my team. And in terms of the twins, they are keeping you very busy. So, yep, constantly. So, anyway, I'm sure you'll be next.
Putting that off for as long as possible, man.
That's good. Anyway, look, I'm really appreciative, Alex, of you pushing for this podcast and, building something here that we can share with clients and other people who are interested in this sort of stuff. So I'm very, very happy that we're doing this and, using it as an education piece and also as something that we can build for clients to give them a bit of support and,
that's awesome.
be able to push through. So
I'm really
it's
excited,
good.
Man. Bit nervous, but really excited for this. So, Charley, do you want to tell us a bit about yourself?
Yes, so in 2012, I made the decision to commence my career in business services. And I guess the passion started before I started at university. So I was really, interested in getting into business services and learning what it's about and stuff like that. So I did apply for a job at my first firm back in Chatswood. So one of the directors here at the moment, Amanda Rogers, took me on as a grad in business services. And from there, I guess the passion began. I began to learn about how to reconcile accounts, doing things as simple as GST and accounting fee recs and simple reconciliations that helped build my knowledge in the field and understand what accounting was all about. And I think for me, I know it's a bit cliche, but the love of the numbers and the love of the reconciliations is kind of what drove me to it. So it kind of stuck with me. And from there, I guess, I had a lot of support from Amanda and other team members that allowed me to kind of build my career and push through in accounting. So I was very grateful for that. And did a 4-year stint at my old firm and Amanda decided to leave and come to WLM. And shortly after, I decided, look, I wanted to follow and I know that I could get the support and the mentoring I needed from her to keep building my career. And so I did decide to come to WLM. That was around 2016, late 2016. So yeah, it's been almost 10 years now. End of this year will be 10 years. So no, it's been very good and I've learned a lot in my career. Initially, it was around, understanding the numbers, how to reconcile things and get that sort of knowledge. But then it developed to more than that. So I began to understand that our job isn't just reconciling the numbers, but it's more helping people, helping business owners navigate through the complexities of the tax legislation, the complexities of running a business, and just, making sure they can get the most out of what they want, not just from their business, but from their lifestyle. So it was, for me, it's kind of very important to know that what I am doing isn't just reconciling numbers, but it's helping people. And I've seen it with a lot of clients who are very stressed about, tax is one thing, but managing their business, managing their cash flow, and, it's all about what they want to achieve in their lives personally and what they're doing it for. A lot of people want to put their kids through a good education. They want to build a nest egg for their children. They want to, build a nice portfolio of investments. They want to manage their own personal circumstances. And, their business is their life, it's their passion, but they're doing it for a greater purpose as well. So that's kind of what has driven me into this career, and what has made me want to pursue a career in business services, dealing with small and medium sized businesses. So that's kind of
So you'd say it
where
started with
my
a lot of
passion
numbers, and now it's turned into something more than that. It's actually helping people achieve their financial goals.
Exactly. Having things reconcile is one thing, but seeing people have businesses that flourish and that can succeed is kind of what I'm looking for. So in my career and where I want to head to, and working at WLM has kind of allowed me to prosper in that regard, because we have a tight-knit group of people here at WLM. Everyone loves working with businesses and business owners. We've got a breadth of clients in a breadth of industries, from engineering to hospitality to professional services to a whole bunch of industries, and we all kind of work together to achieve that common goal with our clients.
So that's a bit about you, but what do you think are the biggest challenges that businesses typically need to deal with?
Yeah, look, that's a very good question. And I think from my perspective and what I've seen is very prevalent with a lot of businesses is dealing with their tax obligations. That's probably one of the biggest things. Cash flow is also another very big problem. And businesses, I think, don't realize the magnitude of cash flow problems and what that can have on their business. Things like reporting and their financial reporting obligations, whether it be for the banks or for government departments or anything like that. So they're really the main kind of issues that I see that business owners are facing these days. And I think a lot of it is manageable, but knowing how to manage that is kind of where business owners are falling down. Knowing where to seek help, how to deal with it internally, having a good team around you, even things like systems and processes can kind of impact on this sort of stuff if the right things aren't in place. And a lot of business owners, unfortunately, with business owners, the statistics are kind of against them. They say, something like 4 out of every 5 businesses fail within the first 5 years. So you can already see there that business owners are set up to fail.
Yeah.
And so, unfortunately, without the right guidance, without the right mindset, business owners can fail very, very easily. And I think what business owners need to be aware of is getting things in place at the start of the business life cycle to make sure that businesses can prosper. The business owners, like their children, a business becomes their child. So business owners need to understand that, yes, okay, this is my child. I really want my business to succeed. I have a passion and I want to see that passion through. Unfortunately, sometimes in business, we have to make decisions that go against that convention and lead with our heads rather than with our hearts.
Yeah.
Because sometimes we can be our own worst enemy, especially in business. So it's important that business owners, lead with their heads and know that sometimes they need to make those tough decisions to be able to prosper in their business.
And that's why they need us, right? It's not always easy to do it on your own.
Exactly, yeah. So, dealing with a professional that understands how things work is important, but also someone like us can look at your business objectively. We're not dealing with emotions, we're dealing purely with numbers, and we're dealing with the reality of where the business is headed. That's kind of where the business mindset needs to be, and adopting that mindset early on in the business is very important. So,
yeah, 100% agree. So you mentioned cash flow, and today's episode is all about managing cash flow.
Yep.
And we're starting with a bit of a controversial statement, which is profit doesn't always equal cash. And I guess it's one of the most common questions or frustrations that I see. I'm sure you do as well, where we sit with the client, we look at their P&L for the year, the quarter, whatever it is, and we go, wow, you've had a really good quarter. And they say, well, my bank balance doesn't show that. And I guess today's episode is all about unpacking that and, why? What are the common things that we see?
So look, you're right, profit doesn't always equal cash. And I think it's one of those things that does make it very difficult for business owners to understand, especially when you're starting off your business. We see these nice sales figures on the profit and loss statement, and we see that there are very good margins being made, but then we look at our bank balance and we're like, okay, where is all the cash gone? And unfortunately, without good forecasting and good budgeting, we can easily burn through cash and not see that cash available, even though the profit and the P&L says to us, okay, you got a good profit figure there. And I think one of the things that one of my clients told me, which was funny but true, is that just like human beings rely on weather forecasts to plan their day or their week, if the weatherman tells you it's 28 and sunny, and you go out every day for a week and it's raining and 17, that forecast is very bad because you planned your day on that forecast. And so it's very important for business owners to have that mindset when they're doing forecasts for their numbers. And so business owners need to really project what their sales are going to be, what their expenses are going to be, but also kind of take that one step further and do a cash flow forecast and say, okay, we've worked out that our revenue for these months are X, our expenses for these months are Y, but are we forecasting and timing the cash for the receipts of those invoices and the payments of those expenses at the same time? And that kind of can leave a lot of people unstuck. And the other problem is that other payments that aren't necessarily on the profit and loss can hit, like bank loan repayments, home loan repayments for personal cash drawings, all that sort of stuff. So if we're not really managing the forecasting of profitability and cash very well and hand in hand, it can make it difficult for business owners to do that. And I think one of the biggest things that we see is with business owners, especially starting up, is that a lot of business owners want to do the right thing, especially by their suppliers. And they, rush to pay a supplier, make sure that they keep that supplier happy, and, not creating accounts with their suppliers or not doing things like that. And then realizing, okay, look, I've just paid my suppliers, everything's up to date, but the money isn't coming in. My customers aren't paying us. So we end up being a financing company for our customers. And that can kind of create a real problem really fast for cash flow. And then what happens in the first couple of years is once you start lodging tax returns and doing all that sort of stuff, the ATO becomes your biggest creditor. And then what they will start doing is asking you to prepay the taxes and all those obligations up front. And we've got other things like payday super and a lot of other pressure from the government to pay things in advance or as soon as they fall due. But we're not seeing that sort of reciprocation with our customers. And so that can cause a real problem when it comes to cash flow and timing of payments, especially when we're trying to realize that profit as cash so that we can kind of have that cash available.
Yeah. That is the thing, right? Like you have to pay your staff on time. That's a fixed obligation.
Exactly.
But it's not always easy to control when your customers are paying you.
Yeah. And that kind of, can create a real problem for business owners and can leave you really unstuck because, you might have some unrelenting suppliers like the bank and like you mentioned, your staff who want the money now, but then negotiating with your customers to pay you so that you have that cash available can kind of really create a problem.
Yeah.
Unfortunately, I do personally believe that is a large contributing factor to these sorts of stuff. And the ATO, unfortunately now, is very relentless with chasing up debts. So, you kind of find yourself in that position where you're constantly paying all these payments, but not seeing that cash come in at the same time. So that can cause a real problem.
Yeah, the tax obligations is probably where I see it the most with clients, especially when they weren't expecting a big one coming.
Yeah, well, just keep in mind the taxes, taxes have become prepaid. When you're paying pay-as-you-go installments, the government's asking you for tax up front. So if we're not managing the cash flow correctly from profits, we're overextending ourselves and we become a financier for our customers, but not enough cash to then pay our suppliers.
And that's where forecasting is important, right?
Exactly. proper forecasting, proper budgeting systems, and having that sort of stuff in place. And I think where it's important as well is, okay, relying on professionals like us, but also looking at the cost benefit of paying professionals to do something for you, versus making sure the cash is in the door. I mean, you might say, okay, I have to pay a little bit of money to an advisor to work this out for me. Is it worth it? Well, it could be, especially when you're paying 8 or 9% interest to borrow from banks to cover the shortfall in cash in your bank accounts.
Yeah, right.
You know what I mean? So that's kind of one thing there. And other things like, cash flow forecasting tools is very important, because we can automate that process for you and have something in place where you're constantly having rolling forecasts to show you how the cash can come in and when it should be coming in, etc. And allowing you to, time those payments accordingly, because ideally you want to have at least an 18-month rolling forecast to give you that projection to say, okay, over the next 18 months, these are going to be my, weak points in terms of my cash. This is where I'm going to go into deficit. What do I do? Should I be going a bit harder on chasing up suppliers, or where do I draw the line with that? So I think an 18-month rolling forecast with proper software in place is important. And look, talking to someone like us is very important, because we can put you on the right track and say, okay, this is objectively where the issues lie, and this is how we can remedy them. Waiting 60 or 70 days to get paid from your customers is not an option. And if you're going to wait for customers to pay you, what can we put in place now to mitigate these cash flow deficits and make sure you have enough money to keep going?
So what I'm getting from you is forecasting is very important, and also communicating with your accountant.
Correct.
Not something you can do once a year.
And not being the financier for your customers is probably important as well.
Okay, that's awesome. So look, for the listeners at home, what would you leave them? 3 things to leave them with, that they can help remedy all of the issues that you just brought up.
Yeah, look, when looking at profit versus cash, I think the 3 things you need to remedy are, number 1, talking to your professional, whether it be your accountant or financial advisor.
Sure.
Number 2 is having good software in place, to make sure that you can have a rolling forecast for your cash flow and your profitability, to work out when your weak points are. And then, number 3 is, being able to confidently talk to your customers so that they can, pay you on time, and so that you're not really being a financier for your customers. That's really the 3 key takeaways, I think.
One thing I've seen clients do is create a separate bank account for their taxes, for their GST. Is that something that you would recommend?
100%. And it's funny, I'll probably recommend this to 99 to 100% of my clients. And the funny thing is, maybe 1% of those clients will actually put that into effect, and then realize the pinch, because the problem is you lodge your BAS return, and for a lot of small businesses and even some medium businesses, you don't actually have to pay that BAS for another 3 months. So it's very important to not feel like you're on a cash holiday now, because you're really going to feel the pinch in 3 months' time. So I think it's very important, and it's a very good point to say that, we set up a bank account for your GST account, for your tax account, for your PAYGW, for staff wages. Even super, have that money reserved away, so that it is ready and they're available for when you need to make these payments, because that's also one of the problems a lot of people face. And at least then you can figure out, if you do that, okay, what is left over for me to take home? What can I pull out from the company after this is all said and done? And the money's saved away, ready to go. So that's a very good point.
Yeah, and I mean, you can put that into a high interest saver, so at least it's working for you. It's not doing nothing. But yeah, I feel that a lot of clients become a bit stuck when they treat that money like it's theirs.
Yeah, no, 100% agree, and I think that's very important.
Okay, so say you have a client who feels like they have their cash flow under control, but now they want to expand. What issues do you see there?
Yeah, look, I think the biggest issue is having enough capital to service the expansion, whether it be a merger or a acquisition, or even injecting a lot of capital into the business to be able to grow. I think having those cash reserves is important. Now, it could be that the business won't have enough cash to be able to proceed with the acquisition or the merger or capital injection, and we have to look to the banks to finance that cash. I think it's very important that we keep in mind that the banks will want rolling forecasts to see what the cash flow will look like and what the EBITDA, which is the earnings before interest and taxes and depreciation, for the bank to have some comfort that if they're going to lend you the money, that there won't be lulls in the business and that there will be enough cash for you to maintain the expansion as well as making the repayments on that loan. So it's important to have those cash reserves and couple that with the forecasting to be able to make sure that you have enough cash to be able to service that expansion. And it's very, very important that we maintain it and stay on top of it, because not only are you using it for your own self and your own business now, but it's a requirement from the banks to have those forecasts in place so that the bank has some comfort in knowing that you are able to service the expansion as well as repay the debts back to the bank. And I guess what happens with expansion that a lot of businesses need to understand is that a lot of pressure will come with the cash flow from government authorities. The first being the ATO. So the ATO will require you, once you at a certain level, to start lodging your obligations monthly. So all of a sudden now you're forking out this cash much sooner than you'd like, which can put a lot of pressure on you as a business owner. Things like installments will start going up, and prepayment of installments to the government for your taxes will start going up. But also hidden taxes will start to creep. So if you have a lot more staff and you go over certain state government thresholds, you'll have to start paying payroll tax, which can be a big killer. Things like workers' comp will all of a sudden start creeping up. So there are a lot of hidden costs that will increase as you expand, which will put a lot of pressure on you as a business owner. So I think it's very important that as an expanding business owner, you do consider these things and have them in the back of your mind, and that we do expand on those forecasts and budgeting to include those in there, because the last thing you need is to have a massive cash crunch while you're borrowing large amounts of money from the bank.
Yeah, 100%.
Because that can really be make or break for your expansion ventures and the growth and success of the business. So I think it's very important as business owners we do keep that in mind. And again, consulting with someone like your accountant, having that software in place is very important, because you need to manage that very, very carefully. Because all of a sudden, we're looking at our profit and loss as a small business and we're trying to match that with our cash flow. But all of a sudden now, as a larger business, we've got other payments that are sitting on the balance sheet that are impacting us, and mainly their repayments and back to the bank. And all of a sudden, these creep of ATO or state government taxes that we have to all of a sudden budget for. And I think, look, we've got to really keep this in mind, because, again, businesses do have that propensity to fail, especially in the first few years. So if we are undertaking these ventures early on, we've got to really keep this in mind when we're doing that. So I think that's very important.
Look, I've seen, businesses that are trading well in the first few years, and then they want to replicate that magic again. And then, once they expand, that's where it starts to go wrong. I've seen that way too many times.
Yeah, look, I agree. And I think at the end of the day, we, all work hard to see the success of the business, but not only for ourselves, but for other people in our lives, our children, our other family members, and all that sort of stuff. So I think that's very, we do it for a greater purpose. So we've just got to really, have these things in place and focus well so that we can keep our business going.
Yeah. So I guess, key takeaways, again, is forecasting is even more important when you're expanding. Sounds like it's always important. And looks like you'll be communicating with your accountant more regularly, because now you've got to talk to them every month.
Yeah, no, I agree.
Okay, so on a final note, can you leave us with some parting words of wisdom as to why cash flow is so important to business owners on a personal level?
Look, it's a very good question, and I think we have to look at the purpose of why we are in business and why we do what we do.
Right.
And as much as we are in business for the love of what we do, we also do it for the people that we love. And so it's important that we have something there that's available for the people that we love, and also for ourselves and what we're, the greater purpose in our life. And obviously we want to have enough cash to be able to draw upon for our, personal expenses, for the home that we live in, for our kids' education, for our kids' future. And we want to really extract that wealth from the business at a personal level and be able to use it for our personal, enjoyment and for our kids' future.
That's why we do what we do.
Exactly. And so why cash flow is important is we want to make sure there is enough cash in the business to be able to extract out tax effectively, and so that we're not stuck with any shocks at the end of the year, and we make sure that there is enough cash that we can have whilst maintaining enough cash in the business for working capital to keep that business going.
Yeah.
And again, forecasting for cash flow allows us to do this, because we can say, okay, look, there is a bit of a profit reserve that's there in cash that we can pull out and that we can manage the tax on, so that we can keep that money personally and use it for our own personal lifestyle. And that's really the key of why we do this. We want to extract that profit tax effectively out of the business so that we can utilize it, but we want to make sure there's enough cash in that business to be able to do it. Now, on the flip side, what we notice with clients is that, sometimes because they haven't timed the cash flow correctly, they end up pulling out too much tax from the business. And by the time tax time comes around, if we haven't managed the cash flow correctly, all of a sudden we've got, money owed back to the company as a shareholder loan. And why that's a problem is that, we as business owners, what we see with our clients is that, they see the business as their own, personal money, but really the business is kind of separate to them completely. So whatever's in that company as cash, the only way it can really become yours is if it's extracted from the business tax effectively. And so we need to make sure that, we're not waiting till tax time to see, have we pulled out the right amount of cash? Because if we owe money back to that company, then it's really going to create tax issues whereby, we might have to declare more income than we expected and pay tax at a much higher rate than expected. And that's really what we don't want to do.
Assuming they can't pay it back. Assuming the money's gone.
Yeah. And that's the thing, tax time comes around, money's gone. Where do we find the money to pay the tax or repay the money back to the company? And that's why doing that forecasting, doing that planning early on can save us these tax headaches at the end and avoid these sorts of tax issues. Because the last thing we want is to owe the company money back that we don't have and then create an unnecessary tax burden for ourselves personally. Because, it's all well and good to be able to create a situation where we're extracting money from the business effectively, but really we don't want to kind of do it in a way that creates, adverse tax issues that we have to deal with later on. So that's why it's important to do that planning early on to avoid these sorts of issues and make sure that these don't happen, so we don't have, unwanted tax problems and we're losing more money to the ATO than we really should.
Yeah, 100% agree. Okay, well, thank you, Charlie. I can tell you're very passionate about this stuff.
Very, very passionate, Alex, and I'm really glad you did this, It's been a long time coming, and I'm glad we're doing these videos. And hopefully we'll have a, few more fun topics to talk about, fun for us, but I'm not sure if it's fun for business owners. But yeah, sometimes I think we need to put these in a format that are informative, but also like hard truths.
Yeah.
We need to kind of portray these topics in a light that, shows business owners what the reality of their decisions are on their business, and making sure that these decisions are always framed in a frame of mind that allows the business to grow. And, we're thinking with our heads more than we are with our hearts. And sometimes, look, it's very difficult for a business owner to do that. It's their passion. Day in, day out, clients are coming in for meetings, and you can see the level of passion and dedication they have for what they do. This is their baby, basically. And they don't want to lose their hard work, but they also want to do things in a way that they feel is right for them. And that's why I think it is important to have an accountant by your side, whoever it is, to guide you through it and also look objectively at what you're doing. Okay, you want to do this expansion or you want to do that sort of a thing. Let us run the numbers for you. Make sure that number one, it is a viable option. It is going to make you money. I know you love that business that you're thinking of acquiring, but is it going to make you money? I know you know what you're doing, but with the resources and tools that are available with the acquisition, is this really going to make you money and put cash in the business and grow the business?
Yeah.
That's really where a good accountant comes into play. Number two, are you forecasting correctly? Okay, you want to buy this business. What are your sales going to be? What are the customers like? Are they going to pay you within a reasonable time frame? Are the suppliers that you're going to be using going to be more demanding now that you're expanding? All these sorts of things we've really got to look at as business owners, and a good accountant really needs to be by your side in these sorts of things. I mean, even things like exiting a business. You want to grow something to a point where you've even got enough cash flow to exit the business. You don't want to be left owing money to suppliers and creditors once everything's said and done. I mean, again, we're succession planning from day one. We need to make sure we have these things in place to allow us to exit and kind of, sail off in the sunset. We're doing it again for a purpose. We want to retire comfortably. We want to enjoy our life. As much as we love our business, one day it's going to come to a point where that business is no longer there. Have we planned for that from day one?
Yeah.
And again, I know we keep harping on about it, but cash flow is key. Cash flow is what drives us to make these decisions and to have these hard truth conversations. If we're not planning cash flow correctly and we're not doing it the right way, we are really going to suffer. Whether it be not being able to pay staff wages, surprise taxes, cranky suppliers, everything can really harm us in business if we are not planning this. Businesses, unfortunately, in this country are, from day one, the odds are against them and they're, set up to fail, unfortunately. And, as good as we are, if we're not good, people with the numbers, we need to be, and we need to get people on our side that can help us. So it's very important.
Wow. Powerful stuff.
Yeah. Profound.
Okay. Well, for those of you who made it to the end, thank you. If you found this discussion helpful, please subscribe and share it with another business owner who you think might find it useful. Thanks for listening to Under the Ledger.
Thanks, mate.